Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Thank you for coming back for another day of technical analysis. Today we will take a look at Tesla as usual, but given the macroeconomics environment, I also want to visit the QQQ for NASDAQ and SPY for S&P 500, as well as some of the key technology stocks that have been plummeting over the last few weeks. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I'd love to share with you my investing and trading journeys. Without further ado, let's get right into it. So let's start with the QQQ. This red line here is 200 days SMA, and the current point of that red line is also signified by the dotted red line here. QQQ has fallen below 200 days SMA as of Thursday of last week. On Friday, not only that it did not bounce back up there, it lost even further and it moved further in the bearish direction. The sell volume is ginormous on Friday, and it was 242% of the last 30 days volume average. The RSI is now very much oversold. I can't even see the last time when QQQ reached this level, which is even below 0%. So in even recent history, the last time I can think of was February of, I believe, 2021 when it reached that level. And you can see chart here, it also tanked down to about $299 level back then. So needless to say, this is a very steep move from the all-time high of $408 and the recent high of about $404 down to about $351. So what does this chart tell me? It tells me that QQQ has been bearish and it has fallen off a cliff at a very fast pace with volume. So there were serious sellers in the market. But I also think that given the RSI, it would probably attract enough buyers coming in now. There is no death cross yet to be formed. So the 50 days SMA, which is the white line here, started to tip down, but it is not down to the point where it crossed below the red line here, because if it does, then that will be a death cross, and that's not good. So far, it has not happening yet. Now, that is not to say that it won't be happening. QQQ can always bounce a little bit and come back down, giving time for the white line 50 days SMA to cross below the red lines. For right now, I think we're reaching very much oversold territory, and we are relying a lot on the big tech earnings week, which is this coming week, to potentially reverse this pattern. If we have weak earnings across the board by Facebook, Apple, Amazon, Google, and Tesla, which is highly unlikely on Tesla, then we could potentially see further downside. For right now, I have a lot of hope, but hope is not going to make us any richer, so we'll have to analyze chart unemotionally. Here's the daily chart for SPY. As you can see here, SPY also had predominantly sell volume. The volume was 238%. So pretty much close to QQQ in that regard. RSI is also well oversold. The last time it was oversold was right around May of last year, once again around June of last year. So the spider has been oversold for quite a bit, and every time it bounced right when it gets to oversold area. So this time too, I believe that it will bounce at some point. The key is whether the bounce is long lasting and become a reversal, or whether a bounce is just a dead cat bounce, and after which the spider will continue to move down further. For right now, I think a lot depends on what the Fed has to say in its upcoming meeting, Tuesday and Wednesday of next week. I believe it's the 25th and the 26th of January. And Fed will probably come out with some kind of statement at the end of the day or right around 11 a.m. PST on the upcoming outlook. It is really hard to walk back from a 3 times interest rate hike in 2022, according to Fed's last meeting and statement. But I do think the Fed could be a little bit creative in its tone, hopefully a little bit more dovish than hawkish, and allow the market to have some hope. Coupled with the technology sector earnings next week, and Tesla in particular have earnings after market closes on the 26th of January on a Wednesday. I think that there are a lot to look forward to. Given the oversold condition here at the SPY as well as the QQQ, and the fact that Fed is meeting next week, I think we have hope for a potential bounce and hopefully long-lasting reversal. But let's not kid ourselves. When a stock or a ticker move below 200 days SMA like this, it either bounce from here or it will go down even further, and that would be terrible when it goes down further. I'll give you an example of what is terrible after it loses 200 days SMA. This is Shopify. So Shopify is a story, a very sad story of a stock that loses 200 days SMA right around the 4th of January, right? So this is this was a situation where if Shopify was to bounce, this is right around where it needs to bounce, but it didn't. It continued to move down further, and by now it is very, very low compared to all-time high at 1762. It is now half of that at $882. You can see here that the white line, which is 50 days SMA, has crossed through the red line, which is 200 days SMA. That is a death cross, not in the making, already created here, and it is signaling more red days ahead for Shopify. So you can see Shopify falling off a cliff over the last few weeks. This is understandable in a lot of ways because when interest rate rises, the present value of all of these growth stock that depends a lot on future growth, the present value would reduce, right? And Shopify is one of the classic cases where it has gotten inflated really fast, and a lot of people attributed hyper growth into Shopify stock over the last few months. While the growth of Shopify might still be there, when interest rate rises, it would be one of the first stock to move down. And we have seen this with this particular drop vigorously here over the last few weeks. The volume on Friday was 403%. Almost all of it is sell volume, and RSI has gotten to oversold, and it has been in oversold territory for quite a while now. And speaking of which, keep a very close eye on Shopify because at one point it will bounce, and it will bounce violently. This is the level of price that Shopify had back in even October, September of 2020. So I think this is a more than just a 52-week low for Shopify, which is very disappointing, but at the same time, completely understandable and predictable in the rising interest rate environment. I could go on for days about Shopify, but let's move on to our beloved Tesla. So here's the daily chart for Tesla. The volume on Friday was only 138%. So if you recall, QQQ and Spider were both around 240%, give or take. Shopify was 400%. Tesla was only 138%. Now, I know I'm comparing apple to oranges, but bear with me for a moment. This tells me that a lot of people sold other technology stock but Tesla. Tesla necessarily has to go down when everybody is going down. There's a healthy amount of investor that want to exit Tesla to buy something else, or they're just panic selling. So it is understandable that Tesla also went down by 138%, but the relative volume comparing between Tesla and other technology stocks is not as bad, although the price action candle here last Friday is also pretty bad. Please note that Tesla by now has lost 50 days SMA at 1052. Also, as of Friday, it also lost 100 days SMA at $954, proceeded to almost fill the gap. The gap ended at 937, and I think it got really close, somewhere around 940 or 941 on Friday. So where does Tesla go from here? Aside from technical analysis, I think Tesla has a lot to look forward to. Once again, we have Giga Berlin and Giga Austin could be slated for saleable vehicle productions anytime now. With that, it could increase overall vehicles produced and delivered to the overall market. And we all know that it is not an issue of demand for EV, for Tesla EV in particular, it is a matter of supply. So once the 2 gigafactories are up and running, supply constraint will be relieved and Tesla would continue to deliver with higher production, higher delivery, higher margin, and so on and so forth. So you see here the vehicles delivered for Q4 of 2021 has surpassed consistently previous quarters. Model Y, the vehicle projected to be the best-selling vehicle of any kind, continued to skyrocket in volume. And this number is expected to keep growing for quite some time. Revenue has been increasing, and with the fact that Q4 2021 was a record quarter when it comes to delivery, I expect the revenue number will also be a record quarter in revenue as well. There are a lot to be said about gross profit and operating income. I am going to prepare my model and projection shortly here, but I think that Tesla will also increase both gross profit and operating income. As far as net income, I think that's a foregone conclusion because Elon Musk's compensation package has come down a little bit in the back half of 2021. And if you look at operating expenses for a company with top line continuously increase, but operating expenses continues to reduce or stabilize from Q1 of 2021 to current, it has been reducing. This is a very good story to have for Tesla. So I think that Tesla will be doing very well with Q4 earnings result. And I will be not only preparing one, but I will be looking out for Rob Maurer's and a few other Tesla bulls analysis and projection on Q4 financial as well as the entire year of 2021. So with that in mind, I think right now Tesla represents a unique opportunity to buy. It is a bargain of a century as usual. It is very difficult to buy when the market is consistently red and you don't know how far Tesla could go. Right now, 200 days SMA is right around 807 or so. So it could potentially fall down there just like the rest of technology stocks. But I don't think so, realistically speaking, because of the upcoming earnings. Now, there are a lot to be speculated about what could happen after earnings, so we'll save that for another day. But for right now, let's take a look at the hourly chart and project out possibilities for Monday, Tuesday, and Wednesday of next week. So on the hourly chart, as you can see here, Tesla moved down last Thursday and Friday, then consolidated for the first half of this week and then started move down again for Thursday and Friday of this week. The pivot point for Monday on the upper end is 984, middle pivot point is 962, and the bottom pivot point is $898. So at the bottom pivot point, not only Tesla filled the gap, but it also lost 100. It would also lose 100 days SMA, just like it did on Friday, and continue to go even further down below $900. For those of you who have been waiting for an opportunity to trade Tesla, whether earnings or not, I think when Tesla fall below 937, it represents a really good opportunity. And potentially, if it moved down very fast and very vigorously on Monday, reaching somewhere in the 900 range, even $910 range, there's a good opportunity for a call option, in my opinion. I will be probably waiting with an order, a limit order, but let's analyze some of the options possibility after we go through charts here. The RSI is also oversold here, so Tesla has every reason to bounce. What I'm now afraid of is Tesla or the market gap up on Monday. I do not want that. I want it to continue to go down further because the more it goes down, it represents a better opportunity for entry, knowing that the bounce will happen. Now, a lot of you ask me overall about what I think about a future market crash, and at which point do I say, forget it, let's sell everything. As an investor with a multi-year horizon, I would never say that. First and foremost, I think that stock goes down, will come back up. It's just a matter of fundamental, right? Companies don't change. These big technology companies haven't really changed anything in its business behavior. Amazon didn't just lose 30% of its revenue while the stock has been moving down 30%, right? So in my mind, these are opportunity to buy. It might sound doom and gloom, and it might sound like let's take money off of the stock market because everything is so dangerous now. That is not the case as a long-term investor. So for that matter, coupled with the fact that the Fed is going to meet next week and Tesla releases potentially excellent earnings next week, I have every reason to believe that Tesla will bounce. So I would... Now, I don't know if it would bounce violently to be worth the benefit and the profit for options trading, or is it going to bounce just for 2 minutes and then come back down? That I don't know, right? But overall, in the horizon of 2 to 3 months out, I think both the stock market and Tesla will bounce and potentially reverse to the bullish side. I don't know exactly when that moment will happen. I can only hope that it would happen a little bit after earnings, if not before earnings. But that is not something for me to speculate. We can only try to predict one day at a time, and predicting a potential reversal for the next few weeks. And if so, what would we do to take advantage of that, right? So to start with, I think February 18th would be probably the earliest of expiration that I contemplate. I would not contemplate anything before February 18th, just because right after earnings, if things don't go well the way you want, it could probably reverse, right? Of course, my hope is that once I enter it at the bottom, hypothetically on Monday, I can immediately turn around and sell on Tuesday and Wednesday at 50 to 100% profit, because it would have been bouncing already. But that is not a guarantee. So February 18 is the must for me. I potentially go even further out, and we'll take a look at that. So for February 18 at 1,000 strike price, which is not too far away, it is about $5,500 right now. So you're having about 4 weeks of expiration with the earning right next week, and you're looking at $1,000, right? If Tesla really blows everyone's expectation by a lot, then I think Tesla could easily gap up $50 to $60 and continue up over $100, as we've seen in recent history, right? So $1,000 strike price is not a bad odd. However, keep in mind that if Tesla continues to go down further after it reaches $900, then the premium will be very much deflating even before earnings, and this already have a earnings premium built in, right? So you could easily lose 50 to 75% right after earnings if Tesla goes the other way. And I can't say that just because earnings is wonderful, stock price is going to go up, right? It doesn't always work out that way. Even if you know that Tesla is a good stock from an investing standpoint, it can always go down before it going back up. So I'm not going to say that this is a surefire trade, but it is a good probability trade, especially if Monday Tesla goes down even more. This premium could get to about 4,000 or 4,500, and that is a very decent opportunity. If you are like me, I would probably buy some more time. I could go out to May or April. May would cover the next earnings, and April 14th would not. So let's take a look at April to avoid premium inflation for earnings and see. At that time, I would do 1,100 strike. This is right around 6,400. Once again, this needs to go below 5,000. If Tesla moved down Monday morning, then that's also a good odd. You would buy 2 more months from February 18, and you add $100 to strike price, and you would only pay about 1,000 or 1,500 more in premium. So that's also a pretty decent odd in my opinion. If you want to go even further out, let's take a look at September 16. So September 16, you probably will want to go out to about $1,200. Right now, you're at about $11,000 in premium. And that will give us 2 more quarters in terms of earnings, and it will get us it will give us 2 more earnings, April and July, including the upcoming earnings. So 3 earnings total, for about $11,000 at $1,200. And $1,200 is still lower than the previous all-time high. So keep in mind that Tesla could easily get here if everything goes well, even before September, right? So this is not a bad bet. However, if Tesla consolidates for a long time, and it has the ability to do so, as we all know, then this could be a bad trade. So it depends on your risk tolerance. If you're willing to drop, $30,000, $40,000, you could go out to, let's say, March of 2023. That I would go for 1,500 or 1,400. 1,400 actually right now is at around 13,000. Surprisingly, it's not that expensive. 1,600 is around 10,000. If you go closer to the money, around 1,100, that's about $20,000. That's actually not a bad bet at all, because it gives you the entire year of 2022 plus January 2023, which include quarterly delivery result as well as earnings results. So a year from now, I'm pretty sure that Tesla will be going up. It would easily be around $1,500 from a fundamental standpoint. For those of you that want to go out to January 2024, which is the furthest expiration you can buy, I think you could look at $1,300 at $23,000, or $1,400 at also $22,000. This is totally achievable in terms of strike, and you have about 2 years. And so I think that is a very good bet as well. As a matter of fact, if I only have $30,000 to invest in Tesla, I would rather buy an option than buying 30 shares in Tesla. But of course, a combination of options and shares would be ideal. But that's my strategy. If I don't have a whole lot to invest and I only can do either option or shares, I would opt for options. So those are a few possibilities. I usually don't go too far out the money, because if you have an imminent run right after you purchase the call options and your strike is at 2,000, you usually don't benefit much from that imminent run, and it makes holding longer even harder and very frustrating to hold when you have a big run and you don't make a whole lot of profit. So I usually go closer to the money to give some room for an imminent run profit, but I also want to have a relatively safe distance in terms of expiration. So I would not go for January 28th or February 4 or anything like that. I would still go a little bit further out. Once again, February 18th, February 25th, March 4, in my mind, would be more of a short-term call option. And then if not, I would go even further out to Q3 and Q4 of 2022 or 2023 and 2024. So to summarize, I think that Tesla still have a little bit more downside to go, especially if macroeconomics environment cooperates to the downside. Look at QQQ. I know that it lost 200 days SMA, and it could potentially go down further. That said, I think that the time for Tesla to reverse is soon. I think Tesla is looking for the bottom at the moment, and it could potentially bounce, anticipating good earnings. So that is at least the catalyst that we're looking for to next week. If you would like a call option, I would wait for the premium to get about 10 to 20% cheaper. Hopefully on Monday it will tank a little bit. Or you could also wait for a clear sign of reversal. At that point, premium premium might be more expensive than what it is now, but the probability of a reversal is higher at that point. So those are just my general thoughts there. I will be contemplating a call option potentially Monday if it keeps going down. And hopefully I could hold that through earnings. But once again, as always, it's a very risky proposition to buy anything to hold through earnings, because despite good earnings, the stock does not necessarily have to go up. So hopefully the video is helpful to you guys. Comment down below if you have any question, concern, or constructive feedback. And until the next video, bye.